Sierra Metals is a polymetallic producer. We are listed on the TSX with stock ticker SMT, as well as the New York Stock Exchange American with SMTS. Our standard disclaimer, as I will be making forward-looking statements. Sierra Metals has 3 operating and producing mines. Yaracocha, which is our biggest mine, is located in Peru, and that's our polymetallic mine. There we produce zinc, copper, lead, silver, and gold. Our Bolivar mine, located in Mexico, is primarily copper producing, and Cusi, our smallest producer, still in development, is primarily silver. Just looking at our investment highlights, we have a solid financial position with just over $40 million in cash at the 6-month mark and an adjusted EBITDA of $24.6 million. Our debt position is $99.5 million with a net debt position of $59.2. We use all of our cash flows towards our debt and capital expenditures, so we are fully funded. We have a growing free cash flow, which you'll see in the slides to come, but the biggest story coming out of Sierra is that of our strong growth. Through our production optimization programs, we've created significant efficiencies in our mining operations. At our Yaracocha mine, for instance, we completed a tunnel at the 720 level, which connects the mine and then goes right out the side of the mountain to the mill. Our very successful and ongoing brownfield exploration program has also provided us with several new discoveries at Bolivar this year. But our biggest focus in 2019 has been our expansion program, with goals to expand production across all 3 of our mines. Our capital structure is made up of 162.6 million outstanding shares, with some RSUs used for management capital, giving us a fully diluted share count of 164.5 million. We are in an NCIB right now to buy up to 2.5 million shares. We've purchased so far about 1.5 million. Our major shareholders comprise of Arias Resource Capital, a private equity fund based out of New York with 52%, BlackRock out of the UK at 10%, and a couple of other notable shareholders, Leon Cooperman, as well as West Family Offices based out of Chicago. We're currently covered by 4 analysts with H.C. Wainwright, Jefferies, Noble Capital, and Roth Capital. You can see our stock performance there. Bit of a downward trend over the past year. We closed at 139 on Friday, so we see it as a bit of a significant buying opportunity for investors. I mentioned that brownfield exploration is one of our major platforms to grow our company. Last year, we completed just over 125,000 meters of drilling. Our target this year is about 51,000. In addition, we're going to see updated NI 43-101 technical reports from both Yaracocha and Bolivar, with Cusi to follow in Q2 of 2020. In addition, we have our expansion program I was telling you about. That's staged production increases across all 3 of our mines. If we look here at 2018, we finished off the year at 6,750 tons per day. Breaking that down by mine, Cusi in the green, we completed the year at 650 tons per day. With the addition of another ball mill, our target is to finish the year at 1,200 tons per day this year. We're currently at about 1,100 tons. Bolivar, in the orange there, we finished off last year at 2,900 tons per day. We're already at 4,000 tons per day this year, finishing off the year at about 4,250. And then Yaracocha, which is represented by the blue in the bar graph, we finished the year at 3,150 last year. We are in the permitting process to increase that to 3,600 tons per day by mid-year 2020. We're also expanding our tailings facility in that process. This page just highlights the PEA results, which provided the basis for us to go ahead with our expansions. Looking at Yaracocha, for instance, an after-tax NPV with an 8% discount gave us a $393 million NPV. Return on investment of 486%. At Bolivar, $214 million after-tax NPV with a return on investment of 550%. And at Cusi, $92 million. This time they had calculated a return, or an IRR, sorry, and that was because at the time of the study, Cusi was not cash flow positive. But the overall picture here, combined NPV of $3.86 per share. When I mentioned we closed at $1.39 on Friday. This next slide breaks down each of our mines in a little more detail, but looking first at the revenue mix for 2019, we're at primarily zinc at 34% and 37% copper, followed by silver, lead, and gold. By the end of the year, we should see that pie chart increase a little on the silver and copper sides because of the increased production at both Bolivar and Cusi. Our mines here on the chart, Yaracocha is our Peruvian asset I mentioned. We're 82% owners there. It is in production. It is an underground mine, and it's our polymetallic mine. Bolivar is our copper mine. There we're 100% owners. It's in production and it's underground as well. And finally, Cusi, our silver mine. It's in production but also currently remains in development. Looking at our production versus our guidance, we report in 3 different metal equivalents: zinc, copper, and silver. Looking at copper, for instance, we're at 79 million pounds of copper equivalent production at the 9-month mark. We guided to between 107 and 120, but we experienced an illegal strike at our Yaracocha mine earlier this year that halted production for 24 days. We're making up for that production. We should still hit our guidance and perhaps on the lower end of the range, but we're certainly getting there. And our solid financial position, a little more detail here. If you look at the outstanding share count, it hasn't fluctuated very much over the course of the last few years. So we're still continuing to add value on a per share basis. Our revenue at the 6-month mark, a little lower, and that's due to, when you're comparing it to 2018, it's a little lower, but that's due to 3 factors. Our strike that I mentioned, reducing our revenue there. In addition, we saw the first half of the year with sort of lower metal prices, and then our slower than expected ramp up at both Bolivar and Cusi. As we were increasing production, we just had to go through a few little tweaks, but we're certainly making up for that in the second half of the year. We should see that number come up. Our net income, which is at a $1.9 million loss at the 6-month mark, again, that's a direct factor from our reduced revenue. In addition, we had some costs that we incurred due to the illegal strike, some contractor expenditures that had to be put up. Our CapEx this year is about 70 million. That's a one-time increase to that larger amount. We'll see that come back down after all of our growth, our expansion projects are finished, and to about 50,000 next, or 50 million next year, and then beyond that, probably about 35 million. Our free cash flow, we should see that go up and accumulate, given that our expenditures will come down, our revenues will come up with our increased production, our per unit costs will come down, and will ultimately add to our shareholder value. We're really just focused on being profitable at today's metals prices, but we are seeing a little bit of an uptick in the metals prices. So really, 2019 for us serves as a bit of a transition year. Despite trade war challenges and metal price volatility in the first half of the year, we look forward to longer term as our production comes up, our costs come down, and ultimately, again, increasing our shareholder value. So why invest in Sierra Metals? We have a diversified asset base with 5 metals in 2 countries. The 5 metals adds a little bit of a hedge for fluctuating metals prices. We have a strong growth story. We're growing our reserves and our resources. We operate in supportive mining jurisdictions, both Peru and Mexico. We have a very experienced management team. Our CEO, Igor Gonzalez, is the former COO of Barrick, and before that, he worked with Buenaventura. Ed Guimaras, our CFO, has over 29 years experience as well. We have a solid financial position with enough cash to pay for our growth projects and our expansions. We have a robust operational track record. We've increased our safety as well. Thank you.